So let's talk about rolling options up or out. So to give you an example, and you can use this strategy if trades are potentially going against you, or potentially you see an opportunity to just grab some more cash, and I'll show you how that works. So today's the 12th of March, and about 7 days ago or so, I sold on the 5th of March some FMG put options, Fortescue Metals, with a strike price of $25.50. Now, Fortescue Metals has been dropping in price over the last few days. As you can see here, this was about the 6th here. The stock was trading at about $26. So I thought, selling a $25.50 put option, that'd be great. I'd be happy to own the stock at $25.50. So that's down here. Now, of course, we're in the money, meaning the stock's currently trading at $24.75. I've given the right to somebody to sell Fortescue Metal shares to me for $25.50. They're currently trading on the market for $24.75. So would you sell your Fortescue Metals shares to the market for $24.75 or sell them to me for $25.50? Obviously, you're going to sell them to me because I'm going to pay you more money than what the market is. Now, do I want to buy them for $25.50? Of course not. I'd rather pay $24.75. But a few days ago, when the Fortescue Metals shares were trading up here somewhere, I thought, yeah, $25.50 is a great price to pay. Do I still think that? Yes. So here's a couple of things I can do. I can either just ride the trade or I can roll the trade. Now, these options expire on the 14th of March. That's in 2 days. So today's the 12th, 14th is 2 days away. So the likelihood of me being exercised is very high. So here's what I'm going to do. I'm going to look at positions that I can potentially roll up or out and see what my choices are. So in order to roll up or roll out, I've obviously got to buy back my open position. Does that make sense? So in other words, I gave somebody the right to sell their Fortescue Metals shares to me for $25.50. And for that, I sold 4 contracts and I collected $168. After costs is $132. Now, if I just hang on to these options, I get to keep the $132. That's mine, regardless. That's my money. It's in the bank. If I do nothing in a couple of days, I'm going to have to come up with $25.50 times 400, which is just a little over $10,000. And I'm going to own Fortescue Metals, which is potentially dropping, and I'm going to be paying more than what the market price is. So I'm going to buy myself a little bit of extra time here just to let the stock play out a bit. So what I need to do is I need to buy these options back. I've sold them, so now I'm going to buy them back to close me out of any obligations on this stock. So $25.50 put options expiring 14th of March, for which I received 42 cents for. So clearly I'm going to have to pay more than what I sold them for, which is not ideal, but that's how the rolling strategy works. So in order to close my $25.50 put options that expire on the 14th of 1st that I got 42 cents for, the bid and offer is now 80 cents or $1. So in other words, if I need to close this, I need to buy them back. Now, I don't want to pay $1. The last sale was 80 cents. The bid's at 72 cents. So I'm thinking, what if I try and buy these back for 75 cents? Rather than selling to open, I'm now buying to close. I'm buying these options back to close me out of any obligation. They're the FMG 3H8, which are these contracts that I'd already previously sold. There was 4 of them, which is exactly what I sold. Now I'm buying them back, and I have put in an offer to buy them for 75 cents, which is a cost of $335. Hit proceed, and hopefully that will go through. Here's the confirmation, and here's the confirmation email. Hasn't gone through, but it's sitting in the trading desk waiting to go through. So order confirmation, they are going to buy to close my 4 contracts at 75 cents. Now later on I come back and I realize my order's still outstanding. It's 75 cents. Nobody's taken me up on it. I can't buy these options back for 75 cents. So I may look at amending this order and offering a little bit more to make sure I get through. Now a little later in the day I come back and I have a look. The last price was 80 cents, and I think realistically, I look at the course of sales, nobody's sold these options to anybody for less than 80 cents. So thinking I'm going to be able to buy them for 75 is a little bit optimistic. FMG's falling in price. If it keeps falling, this put option price is just going to keep rising. So I might have to amend it a little bit. So I jump into my order, which is still sitting in the outstanding orders, and I click on the amend button because I want to amend the order. So I change my order price from 75 to 80, thinking, well, yeah, people have been selling them for 80 cents through the course of the day, so I will offer 80 cents as well, which is going to cost me $355. That's been put through to the market, so it's now changed from 75 to 80. Here's my confirmation from my broker saying that, yes, I was going to offer 75 cents. I've amended it. I'm now going to pay 80 cents instead. I then have a look at my executed orders and I see that this one's gone through. So I've bought to close, so buy to close, 4 contracts of FMG. These are the ones that I'd already previously sold. So this has now closed me out of the position at 80 cents. Contract size 100 times 4, which is 400. And of course, the other trade that I did in my previous video, I've sold some CPU put options as well. That's in a different video. But I've now closed this position in FMG, so I have no further obligation. But what I do want to do, because now I'm taking a slight loss on this, because I haven't rolled it, I've just closed it. So remember, I sold the options for 42 cents. I've bought them back for 80 cents. That doesn't make sense, does it? So unless I roll this position, I'm going to sit on a little loss on this, and I don't want to do that. So what I'm going to do now is look for some $25.50 put options that I can sell in a further month. I'm rolling out. I could roll up or down in price. I'm rolling out to a further month. So I've just paid 80 cents. So if I can get more than 80 cents, then I'm going to be in front. So I see this option here, which is currently trading for 89.5 cents for a $25.50 put option that expires on the 21st of the 3rd. So rather than expiring in 2 days, remember I just closed that position, I paid 80 cents for it. Well, now I can get 89.5 cents for pretty much the same position, but it closes in a few more days rather than in 2 days. It's on the 21st. So it's still in this month. It's more than 80 cents, which means the 80 cents that I just paid, I'm going to get back. So I've bought myself some more time, and I actually probably get to pocket a few cents. Although maybe not, because after costs and all that, I probably won't. Now the problem is it's getting close to the market close, and FMG could open up higher tomorrow, so I want to roll this position now before the market closes. I generally don't like leaving things to the last minute, but I kind of have let it slip a bit today. I'm putting in an offer to sell to open, 4 contracts, and I'm putting in the price. I'm not going to haggle with them because the market's about to close, because it's $3.58 for 89.5 cents. Just whatever they're asking, I'll take. And here's my confirmation that it's gone through. They actually got 93 cents, which is nice, because as you remember, I offered to sell them for 89.5 cents. They managed to get 93, which is even better. So I've just pocketed another $336.48, and what I've done is I've essentially rolled my contracts out a few days because these expire on the 21st of March, and I've taken $336, which of course covers the $355 that I just spent. Actually not quite. You can see I'm actually out by about $20 or so, but as I said, I wouldn't normally do a trade so close to the closing. But to be out $20 but have bought myself an extra 2 or 3 weeks of trading time, I'm happy with that. I hope it makes sense, but essentially what I've done is I've looked at the chart of FMG. I'd originally sold some $25.50 put options that expire in 2 days. The market's currently at $24.75, so I'm going to get exercised. I said, I don't know. Give me a few extra days. So I closed out my position, so I no longer have any obligation to buy FMG at $25.50. I bought those for 80 cents, even though I sold them for 42, so I'm sitting on a 38-cent loss. But I then sold some further options, which has bought me a few extra days. Hope that makes sense. Let me know in the comments below if you need more clarification on it. Subscribe. I'll see you in the next one.